Hello everyone, I'm Todd C. Slater, the Simple Investor, and I just thought I would give you a quick update from the Bank of Canada. The new head, Tiff Macklem, has just announced that he sees interest rates staying put for quite a while, so just at a quarter point. Now, this is very positive things for people that are looking for mortgages. So if you're thinking of buying in the future, you can probably feel pretty safe and secure sticking with the variable, which is going to be a lower rate for quite a while. If we take a look at what the US Fed is doing, right now they're predicting they won't touch rates for the next 2 years. Bank of Canada normally follows suit, and in that case, we could take a look at anywhere from 2 to 3 years. I think that the interest rates are going to stay down very low. So right now, if you're thinking of purchasing, this is probably a really good time. Now, the one cautionary note that I want to bring in, though, is the fact that taking a look at CMHC insured mortgages, so Canadian Mortgage and Housing Corporation, they've announced that they're going to change the TDS and GDS qualifications, which is going to lower the amount that people are allowed to borrow. Now, if we start seeing a run-up in real estate, what is going to happen? Will the Canadian government step in, or will the provincial government step in like they have in the past? If we take a look at what they did here in Ontario, 2017 introduced the foreign buyer tax. 2018, of course, the stress test rate across Canada. Those items, again, still have an impact on marketplaces. The stress test is not really helping anybody at this time. In fact, as much as a lot of people will say, we need to keep it in place, this might be the time for the stress test to be removed. But again, I just thought I'd give you a quick update on what the Bank of Canada is forecasting in the future. Now, they did say that potentially we're going to see, a little bit of a strong increase in the final quarter of 2020. But when they said that, they also wanted to make sure everybody understands we're not talking about normal times here. Ultimately, in the end, we know that we're going to take a while to come out of this COVID pandemic. And for everybody out there, I just thought I'd give you, a little bit a piece of mind when we talk about real estate. Real estate has never been so important than during this pandemic. This has really shown everybody that, having your own home, being able to be safe and secure somewhere is very important. Well, tenants feel the same way. Having a place that they can afford, a place that they can call their own, is just as important as you, the homeowner. So I think I want to keep everybody up to date on what's going on as far as the rental market goes and investment market as well. But, when we take a look at it, ultimately in the end, it's not just a necessity. Home is going to be redefined in the years to come. More people will be working from home, more people will be staying at home, not as many vacations perhaps. And this is one of the reasons why I am always going to be a huge advocate of both home ownership and investment real estate ownership. And, based on, again, the announcement as of yesterday from the Bank of Canada, looks like interest rates are going to stay very affordable for the next few years. So, is the opportunity out there for you? It sure is. So stay tuned here, and I'll keep you up to date on what's going on. I'm Todd C. Slater, the Simple Investor. Thanks for tuning in.